Hey everyone, welcome back to Corporate Decoder, the place where we take super dry corporate filings and make them surprisingly juicy. Today we are diving deep into the Fidelity Nasdaq Composite Index Fund's financial report. And trust me, this report has more numbers than a math teacher's dream. Let's get right into what is going on with this fund, which tracks the Nasdaq Composite Index, a big basket of technology and growth stocks. Think of it as a snapshot of the hottest companies driving the digital revolution. So this report covers the period up to the 30th of November 2025. And even if you don't invest in funds like this, understanding how these big investment vehicles perform gives you a really good pulse on the overall health of the market, especially the tech sector. The report highlights that the US stock market had a really strong run for the year ending November 2025. This was boosted by big tech companies doing exceptionally well in information technology. For instance, saw a massive gain of about 28%, pulling a lot of the fund's performance along with it. Other sectors like communication services and even utilities also showed strong positive returns, which is interesting. But it is not all sunshine and rainbows. The report notes that the industrial sector actually returned about -7% and detracted from the fund's overall performance. Real estate also took a hit, and consumer staples saw a dip. This tells us that not all parts of the economy are growing at the same pace. Now, this is where it gets really interesting. The report breaks down the top performers and the biggest drags on the fund's performance. Alphabet, for example, was a huge winner with an 89% jump in price. Companies like Broadcom and Nvidia also had incredible runs, with Broadcom even soaring 151%. Even Apple chipped in with an 18% gain. On the flip side, Adobe saw a significant drop of 38%, really hurting the fund's results. Comcast and T-Mobile also detracted, showing that even big names can have their struggles. These specific stock movements are the bedrock of how an index fund performs. It is all about the individual companies that make up the index and how they do. You see, when a company's stock price skyrockets like Alphabet or Broadcom, it means all the investors holding that stock see their investment grow. And when a company's stock plummets like Adobe, it means investors holding that stock are losing money. Let's look at the long-term picture with this cumulative performance table. It shows how an initial investment of $10,000 would have fared over 10 years, ending in November 2025. The Fidelity Nasdaq Composite Index Fund, which aims to mirror the index performance, saw that initial $10,000 investment grow to an impressive $49,830. That is a fantastic return, showing the power of long-term investing in growth-oriented stocks. The Nasdaq Composite Index itself also performed very similarly, which is what you want to see from an index fund. Looking at the average annual returns over 1, 5, and 10 years, the picture is still very positive. For the last year, both the fund and the index delivered a strong 22.33% return. Over 5 years, it is a solid 14.84% annually, and over 10 years, it is an outstanding 17.42% annually. These are truly remarkable numbers, especially when you compare them to the S&P 500 index, which while still good, shows the Nasdaq's tech-heavy focus really shined over this period. The fund itself is massive, managing over $23 billion. That is a huge amount of money, and it means these investment decisions have a significant impact on the market. Now, let's decode what this fund actually invested in. Information technology is overwhelmingly the biggest slice of the pie, making up over 51% of the fund's assets. This makes sense given it tracks the Nasdaq Communication Services, comes in second at 16.3%, followed by consumer discretionary at 13.5%. These are the sectors that have driven much of the market growth. Virtually all of the fund's assets are invested in common stocks, which are the purest form of ownership in a company. This means the fund's performance is directly tied to the ups and downs of the stock market. And where are these companies located? Almost all of them. 96.5% are based in the United States. This highlights the dominance of the US in global technology and innovation. Let's look at the top holdings. Nvidia Corporation is number 1, representing over 11% of the fund's assets. Then comes Apple at 10.7% and Microsoft at 9.6%. These three giants alone make up a significant portion of the fund. This concentration in a few major companies is a key characteristic of index funds, especially tech focus ones. It means the fund's performance is highly dependent on the health and growth of these specific mega cap tech companies. Moving on to something a bit more administrative but still important. The report details the fees paid to auditors Deloitte and Touch LLP. For the year ending the 30th of November 2025, the fund paid over $64,000 in audit fees and about $6,700 in tax fees. These might seem like small numbers compared to the fund's size. but it is crucial for an independent auditor to scrutinize the financial statements to ensure everything is accurate and fair. Here we stumble upon the full financial statements, which are the meat and potatoes for data nerds. But for us, it is about translating these numbers into what they mean. This section shows the detailed breakdown of the fund's investments. Scrolling through this huge list of common stocks, you can see it is heavily weighted in the US as we saw before, but there are also investments in companies in Argentina, Australia, Austria, and many other countries. The total net assets of the fund are over $23 billion. This number is the total value of all the investments held by the fund minus any liabilities. When you see this number grow, it means the fund is performing well and investors' money is increasing in value. Looking at the financial highlights, we see figures for net asset value. Importantly, for the year ended the 30th of November 2025, the net asset value per S-share reached $297.85. That is a significant jump from $181.29 in 2024, showing substantial growth. The total return for 2025 was a whopping 22.33%. This means that for every dollar invested, the shareholder essentially earned over 22 cents in that year. This is a phenomenal return and really speaks to the strength of the Nasdaq index over this period. Now, let's talk about the cost of investing in this fund. The expense ratio before reductions was 0.29%. This means for every $100 invested, just 29 cents went towards administrative and operational costs. This is generally considered quite low for an actively managed fund. But index funds often have lower expense ratios because they are passively managed. For a fund managing over $23 billion, even a small expense ratio translates to significant dollar amounts, but the low percentage indicates good cost management. Fidelity Management and Research Company LLC, the investment advisor, is responsible for managing this fund. They are compensated through management fees. The report notes that the management fee charged is 0.29% annually. This is a standard fee for such a large fund, and when you consider the massive assets under management, it still amounts to a substantial sum for the advisor. This number might look a little odd. It says the total investment in securities is 103% of something. This often happens in financial reports when a fund is using derivatives like futures contracts to manage risk or enhance returns. In this case, the fund had $2,364,223 in futures contracts, which are bets on the future movement of market indexes. These derivatives can magnetize gains, but also losses, and sometimes push the total investment value above 100% of the fund's assets. Finally, the auditors Deloitte and Touch LLP have given their stamp of approval. They are saying that based on their audit, the financial statements present a fair picture of the fund's financial position. It is always reassuring to see an independent auditor confirm that the numbers in the report are reliable. Now, let's talk about what this all means. The Fidelity Nasdaq Composite Index Fund has delivered truly outstanding returns for its investors, especially over the long term. The heavy concentration in technology stocks, particularly the mega-cap tech giants like Nvidia, Apple, and Microsoft, has been a massive tailwind. When these companies do well, the fund does incredibly well. However, this also represents a significant risk. If these few dominant tech companies were to stumble, or if the technology sector as a whole were to face a major downturn, this fund would likely suffer significantly. The report itself acknowledges the risks from various factors, including global economic disruptions and geopolitical events which can heavily impact the tech sector. The fund's strategy of closely tracking the Nasdaq Composite means it is essentially betting on the continued innovation and growth of the technology industry. As long as that trend continues, investors are likely to see strong returns. But, as the report shows, there are also sectors within the economy that are not performing as well, and this fund is not significantly exposed to those areas, which means it misses out on potential gains if those sectors rebound. In conclusion, this report paints a picture of a highly successful fund that has generated impressive wealth for its shareholders. Driven primarily by the astronomical growth of the tech sector, the key takeaway is the powerful performance of technology and the significant concentration within that sector. It is a testament to the enduring appeal of innovation, but also a stark reminder that past performance is never a guarantee of future results. What are your thoughts on this fund's performance and its heavy tech concentration? Let us know in the comments below if you found this breakdown helpful. Please smash that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community, linked in the description, for more exclusive content and discussions. Thanks for watching Corporate Decoder. See you next time.